If you're even thinking about using an FHA loan to buy a house in 2026 and you have questions about the down payment requirements, stick around for this entire video. It's going to give you all the information you need to make an informed decision about your home purchase. So let's start with the minimum down payment for an FHA loan. According to official HUD guidelines, borrowers have to put down at least 3.5% of the adjusted value of the property. Now that just means the appraised value of the house or the sale price, generally whichever is lower. So take that amount, multiply or factor by 3.5%, and that's the amount you have to put down. This is based on the official HUD handbook for FHA loans. What does that amount to, or what is that going to look like in terms of real dollars? Okay, how much are you going to actually have to come up with out of your pocket, out of your bank account? 3.5% of a $300,000 home would come to $10,500, and you can just scroll on down through the table. This just shows you what a typical down payment would actually look like in terms of dollar amounts. And remember, it's a direct function of the home price. So if you buy a more expensive home, you need to come up with a bigger down payment. And if you buy a lower priced home, like a starter home, you're going to shrink your down payment. So you might be able to make your purchase sooner rather than later. These are key considerations. There's pros and cons on both sides of the fence. Just make sure you come at it from a position of knowledge and understanding. So credit scores are another important factor when it comes to FHA loan down payments. Okay, you can't just have any credit score. There are specific requirements that are in place. And one of the most important requirements, you need a credit score of 580 or higher for the 3.5% down payment that we talked about. Okay, your credit score is based on information in your credit reports, and those reports compile information about how you've borrowed and repaid money in the past. So if you're the kind of person that pays all your bills on time and you manage your credit, you'll probably have a higher score. If you've had delinquencies or missed payments in the past, you might have a lower score. But if you want to get that 3.5% down payment, you need to have a 580 or higher. If your score falls between 500 and 579, FHA loans require a down payment of 10% or more. And that kind of defeats the purpose. Most people who use this program want that 3.5% down payment because it's a big benefit. In order to do that, you got to have a 580 or higher. And if your score is below 500, you might not qualify for the program at all because they do set a floor at 500. So in that case, you might want to focus on how you can improve your credit score. Let's talk about where the money can come from, right? 3.5% down, where does it come from? What are some of the acceptable sources for an FHA down payment? You can use, obviously, checking and savings accounts. This is the most common method borrowers use for their down payment. This is money you've saved that's in the bank. You can also use money you've saved that is at home. Cash on hand is what mortgage lenders call it, or mattress money. And this is just money that's not necessarily in the bank, but it's your money and you can use it for your down payment. You can use retirement accounts, but there are specific rules here. So if you want to use like an IRA or a 401k to help cover your down payment, tread carefully there because some financial advisors don't recommend this strategy. But if you do want to do that, talk to your lender because they usually have a limit to how much you can draw from your retirement accounts. Like might be up to 60% or something like that of the account balance that you can put toward your down payment. So there are some caveats there. You can use stocks and bonds. You can use private savings club. I mean, there's a pretty broad range of acceptable funds. And this last one, bam, you can use gift money from an approved donor. This is huge, guys, okay? The money doesn't necessarily have to come out of your pocket. So let's talk more about gift money. FHA loans, and really most mortgage loan programs, allow borrowers to use gift money. And this is exactly what it sounds like. This is when someone else, like maybe your parents or a close friend, gives you money to put toward your down payment. And there are some caveats here, some specific rules that can come from a family member, an employer, a friend, a charity, an approved government agency. They can all provide money for down payment gift funds. The person who provides the money has to give a letter to the mortgage lender. It has to go into the loan file. And this letter needs to identify who is giving the money, the amount that they're providing, and most importantly, that they don't expect any form of repayment. Okay, down payment gifts. They call it gift because it cannot be a loan from one person to another that needs to be paid back. This has to be gift money, and the donor needs to sign a letter to that effect. And the lender will verify the transfer from the donor to the borrower. All gift funds must be documented and traceable. And they'll just use bank statements or canceled checks or whatever documents are available just to to document the transfer from the donor to the borrower. Let's knock out some common myths and misconceptions about FHA down payments. This is, something about down payments. There's just so many myths and misinformation and misunderstandings out there. So let's just debunk them one at a time. And the first one is that you can only use your own money for the down payment. We just covered this. FHA allows gift funds from approved sources for all or part of the down payment. So, for example, parents could give their children the entire 3.5% that the FHA requires, or they could give them part of it. Okay, so that's something that you need to keep in mind. It's a really big benefit. Another myth, people think that they need 20% down to qualify for an FHA loan. It's because a lot of news reports talk about the 20% down payment being standard. It's not, okay? Even with a conventional loan, you can put down a lot less than that. And with FHA, you could put down as little as 3.5% if you have that 580 credit score or higher. Another myth is that the seller can give you money to put toward your down payment, right? Seller concessions. Not true. In most cases, sellers can help with the closing costs for an FHA loan, but not the down payment. Right? That has to come from one of those acceptable sources we mentioned earlier, and the home seller is not one of them. Myth number 4, the down payment and earnest money deposit are the same. They're not. They're two different things. Both can be applied to the purchase. The earnest money deposit that you pay up front when you make an offer on a house to show the seller you're serious, that can be credited toward your down payment or your closing costs at closing, but it's not the same thing as your down payment. They're different. Okay? The down payment is just a percentage of the home price that you have to pay at closing. Mortgage insurance, we're going to wrap with this because it's required for all FHA loans, regardless of how much you put down. And the FHA loan program is basically one big insurance fund. Borrowers pay into it, and the FHA uses that money to insure lenders against losses. Okay, so the program requires home buyers to pay for mortgage insurance, but that insurance protects the lender, not the borrower. That's just the way it is, guys. There's nothing you can do about it. There's an upfront premium, usually that's 1.75% of the base loan amount. This can be added to the mortgage, and it just slightly increases the monthly payments. So you don't necessarily have to pay it upfront. There's also an annual premium that's, for most borrowers, it usually comes to 0.55% of the base loan amount paid annually, but that can vary depending on how much you put down. And that too can be added into your monthly mortgage payments. So again, both can be kind of factored into the loan. They don't have to be paid up front. And there we go. Can be rolled into the loan. All right, so we've covered a lot of information here, but it really only scratches the surface of what you need to know about FHA loans. If you want to take a deeper dive, you can download my ebook. I created this 58-page, in-depth, practical guide specifically for home buyers. And that's an important point because the official FHA handbook is written for lenders, and it's over 1,000 pages long, and it's filled with jargon that the typical home buyer won't even understand. So I have filled this void by creating a consumer-friendly guide to FHA loan program based on my 20 years of experience as a consumer advocate and educator. And you can download this resource using the video description below, the link in the video description below. So thanks for watching. I really hope this helps you out, helps you make some informed decisions and protect your financial future. And good luck with your home purchase, guys.